Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to Ian Strafford-Taylor and Richard Cooper, CEO and CFO, respectively, of Equals Group, a leading international e-payments provider serving largely small and mid-cap businesses. So welcome, gents.
Morning.
Good morning.
Big congrats on today's very resilient 2020 results and positive start to 2021. In fact, it's been the sort of like the most challenging conditions in a century in terms of GDP, the pandemic, Brexit, and even the Wirecard bankruptcy. So big pat on the back there, guys. But before we sort of dig into the details, Ian, can you just remind investors a sort of a real life example of how corporate customers use Equals' services in the field, sort of highlighting what the company's key USPs are?
For sure. And it's an interesting question, because if you'd asked it 3 or 4 years ago, we'd be talking about a retail customer. And it's important to realize how rapidly the businesses have pivoted from B2C to B2B. And the objective for the company is to target that SME space, so 50 to 500 employee type of business, and provide a one-stop shop, if you will, for all their international and domestic payments needs. So the holy grail for us is to have what we call an own name IBAN, which allows a corporate to send money into an account in their own name within our ecosystem. So if you're asking suppliers or whomever to send you money, it's far easier to do it in your own name. And within our company, that means we can instantly see the money rather than having it in a pooled account, as the vast majority of our competitors will have you send the money to a pooled account. Here it goes into a customer's own account, and they can instantly see it and instantly do stuff with it. Plus, these days, increasingly, anyone that purchases from e-commerce, you have to pay by card. You can't pay by bank transfer. So having the ability to process not only international payments, domestic payments by account-to-account transfer, but also the card aspect gives us this USP. Overlaid on top of that is we're not just a self-serve fintech, i.e. you've got to do it all yourself. You can speak to real people. Our customer services are second to none. And we have a team of dealers that will babysit you through any international payments transaction. And we feel that places us in a kind of niche of our own.
So you say competitors, I mean, you've got basically the traditional banks who you beat on price and probably on service as well. And you've got your
tech.
And you've got your tech, right, with the bank grade technology. And then you've got basically against your sort of straight line or point solution fintech competitors, you've got this one-stop shop which allows corporates to be able to do everything through Equals. So that gives you the differentiation against your fintech peers and rivals.
Yeah, and let's not forget, it's a very good point. The banks still have by far the lion's share of this space. So they're who we're trying to win business off, not the other fintechs. But, let's just pick one at random. TransferWise, now called Wise. Fine, they've got a very good infrastructure they built up over a number of years, very similar to ours. But there you can't do a forward transaction. With us, you can do a forward transaction. There you can't do speak to a human being, whereas here you can. So there's differentiators, if you will. They're more B2C, we're more B2B. And that's really where we've chiseled this space for ourselves. And that underpinning all of this is taking us, a while to assemble, because it's not easy to do, is the connectivity, the licenses, the permissions, all of this stuff that allows us to move money quicker and more efficiently.
Yeah, well, it's certain the strategy certainly seems to be working. Look at the results. I mean, just turning now to Richard. And I mean, I saw that. Can you just quickly take us through the highlights of 2020? I mean, you've come out actually slightly better than my results, because you've got a slightly beat on my EBITDA by about, well, I think you 1.2 million pounds compared to mine was £1 million, and you've beaten me on your cash as well, because I had a net cash position of about 8, and I think you're on about 9, if I read it correctly.
Yeah, indeed. So I think that the key themes to just take from Ian's comments and put into numbers definitely relate to B2B. So, B2B now represents 70% of our revenue and growing. That there has been a successful refocus on the business customers, and the B2B revenue or transactions, we should say. So the underlying, pump that's going through increased by 32% in the year. Our international payments revenue increased by 46%. And non-travel money generally, because we're not a travel money company anymore at all, increased 18% over the period of the year. And we've got in the order of 18,000 unique B2B customers.
And Richard, what's driving that growth in the B2B? Is that basically the company's unique proposition winning against effectively other fintech or effectively the banks, or is it the market growing, or a bit of both?
It's a bit of both, and the challenge for us is to weave all those customers together and cross-sell everything to them. And we know that's the big challenge for this year, but we've now got the tools to be able to do so, and that was always part of the strategy as we migrated from the B2C travel environment, which is we can still do it via our card and bureau products, but it is certainly not top of our list. And the other, I think, really important things to tease out is against the headwinds of both COVID and Wirecard, we've reduced
and Brexit.
We've reduced our money out of the door, let's call it that, from almost 31 million to 25 million in the period of the year, which I think is very, very significant. And unlike many other fintech or similars with a high rate of development spend, we hit cash break even, and that was absolutely our goal as we came into 2020, and despite those headwinds, we achieved it, and hence you can see from your own comment on our cash position, that's the live cash position, and nothing has really been held back. Yes, adjusted EBITDA of 1.2 million, better than market expectations against those really strong headwinds. And if you think about some of the drivers for that, not just for 2020, but for 2021 and beyond, we've improved our contribution margins, where contribution is gross profit less the marketing spend. And there's this big interaction between, marketing spend and, affiliate commissions, etc. So we may swap.
What are the margins, Richard? About sort of high 50s, are they? Something like that?
High 50s, yes. We may choose to spend a little bit more and reduce it down to 55 if we can see the win coming through. But it's all focused on performance marketing and relationship to the revenue that we can drive. And if we can't measure it, we're not going to do it. When
it comes to modelling, Richard, if you drop an extra pound at the top line, are we talking about sort of then 50% plus sort of drop through rates into profit? If it's your contribution, or has he got a bit more underneath the growth?
No, it should be probably higher than that for incremental revenue, actually. Depends on the silo that we get it from.
Yeah.
I mean, banking is over 70%, international payments is probably mid 60s. The cards at the moment is slightly lower, but that's expected to change over time. And, one of the stats that I think Ian's talked about is revenue per employee, which is something that a lot of people follow. And the run rate now, based upon a headcount of around 250, is 120,000 a year, which I think is pretty staggering. Given where we were maybe 18 months, 2 years ago. So the oil tanker has been turned round, and it's not quite a Riva speedboat, but it's definitely edging towards that. And that's the key, is to remain very, very nimble, and with a lower head count and a much more sort of joined up exec team that we've now got, and who are presenting at the Capital Markets Day, then everyone can see that we are, and to use a rowing analogy, because I'm a rower, we're all pulling together.
Yeah. Well, I mean, hey, even an idiot like me can understand if you've got rising revenue and you've got a fixed cost base, then it's going to increase your, the profitability of the business, which sets us up perfectly here to talk about Q1. Because if I read it correctly, you did 8 million of turnover in the first half, which is roughly flat on a very, very strong comparative period last year. And we've just been through the third lockdown. What? Well, I was expecting a sort of like a not quite as good as number on that on the first quarter. It certainly beat my expectations in the first 3 months. What's been driving it?
It's interestingly quite across the board, and everything's been resilient. We definitely had a strong March. There's no doubt about it. Now, if you'd asked me to guess at the beginning of, I don't know, mid-February, maybe we were 7.5. So, we definitely throttled up.
What happened in March?
A bit of line of sight to way out of lockdown, maybe.
Yeah.
Additional products coming on stream. We've had quite a lot of technical development and more to come during the balance of the year. You'll hear more about that at the Capital Markets Day. So just a combination of factors. Also a bit of volatility in sterling. Sterling had a bit of a run in March as well. But interestingly to me, in terms of recurring revenue, is the corporate expense platform outstripped March 2019 by a considerable degree.
Wow. Okay.
So it's
this is business people staying in hotels or going to sort of like.
Actually, interestingly, a good vertical for us there is film production, and that's started to pick up. So there's been quite a lot of activity.
I can confirm that actually, because I cycled in this morning from West London to our offices just north of Southwark Bridge. And for the last week or so, there's been very extensive film crews parked outside Clarence House and the ICA in the Mall. Loads and loads of film trailers. So production is really starting.
Right.
We've seen the volumes on that platform just
tick up,
going like that, and it's following through. And just everywhere I look, even now we've got we talked about B2C not being the build focus, so the retail card, etc. But the fact of the matter is, the silver lining of Wirecard is we have a brand new B2C travel card, not just the card itself, but the linked cards, and the linked cards utilizes tech that we built for B2B, and so we drop it into retail when it makes sense. And we're pushing the fact that that's usable in the UK, and for domestic spend, there's a rewards program. So we're seeing pick up in activity even on the B2C side as well. And there is that kind of hidden, chunk of revenue to come at some point when travel completely opens up. Maybe it'll be next year, but we're an order of magnitude of 4 or 5 million of revenue we're just not getting. Imagine where we'd be when you add that back in as a recovery place. So we're enthused by the first quarter, I have to say.
Brilliant. Well, I mean, I point investors. I mean, there was a CNBC program yesterday. We're talking about Las Vegas, and that sort of like reopened over the last month or so. And regardless of the gamblers, it's things like conferences and exhibitions and business people having been locked down for a year now being able to see each other and connect again face to face. So if that's a sort of movie that's already been or currently being filmed, then you're probably going to see the same thing in the UK. And Ian, how do you see the sort of the rest of the year panning out? I mean, you've had the chief economist of the Bank of England saying, and I quote, a rip-roaring second half. And there's 150 billion pounds worth of savings that still need to be sort of like, sort of spent essentially over the next year or so. And there's going to be lots of sort of holidays and experiences, but equally masses of business travel, and presumably also a lot of e-commerce as well. How do you see that whole sort of like next few quarters? Because it was a minus 10% GDP print last year. I mean, what are you going to do when we get a 10% print in the second half?
Well, if 2020 taught us anything, it's to be highly conservative about our predictions of the future, and who knows what can change. All I will say is, if we can do that sort of performance in Q1 when we were locked down, it's a fact. that does point us towards being optimistic for the rest of this year, as we currently understand it will pan out.
Yeah.
So, and plus, we talked earlier a bit about costs and headcount. We're going to try and keep it around 250, but we are adding and have already added within that number significant new salespeople, revenue generators. And as we go through what we're building this year, there will be some efficiency gains. Let's say, I hate to use the word back office, but you understand what I mean. But we'll probably use that headcount reduction to add even more into the revenue hopper. So 2020 was very much a year of building new stuff whilst retrenching, and 2021 is let's sell what we have and keep building new stuff and sell that. So against that background, Q1 has to make us optimistic about the rest of the year. But I'm not gonna tempt fate at this moment in time, because as I say, we're all wary of planning too far ahead.
Yeah, and what about sort of Richard? What about product development? How much are we going to spend on sort of R&D and sort of capitalising new products? Is that going to be similar to last year or slightly up?
It's coming down. It'll be in the order of 3. We're giving some guidance that you'll see when we push the deck up onto our site, as it currently stands, we still get quite a big R&D credit based upon that, although that will drop away in 2022. I think the key parts of value, though, are that not only have we reached cash break even whilst developing product, so we can look after ourselves, but we've now got an incredibly valuable product deck. Which would cost millions and millions and millions for banks to build. And we see that as a tremendously strong asset. Shame I can't do an accounting revaluation of it. But we know what it's worth. And we've got the income and profits to come in its wake now.
Yeah.
Sorry, Paul, to try. I do feel compelled, so I don't forget it at the end, to thank the 250 employees we have here. They went through a lot of sacrifice in 2020, and the strength of the company. Yes, we've got great products. We're building more. Is really the people, and I think that's what sets us apart. There's a real tight family feel. I know it's difficult to do with 250 employees, easier when you're like 50 or 60, but we have that. We have the office in Chester, as you probably know. We've got an office in London, one in Chester, and the exec team are quite evenly spread between those two locations now. And Richard and I go up to Chester as often as we can, and obviously more past April 12th. So it's that kind of unified group that's pushing this company forward, and they're all excited. 2020 was tough, but it brings you together, doesn't it? That kind of bonding spirit. So that's another reason to be optimistic, I think.
Good. And what actual new products, Ian, are you going to sort of be bringing to the fore? I did see you sort of integrating Equals Money with some of the accountancy software providers, and you're sort of like, you've done recently the cryptocurrency bit, and you've got the B2B2B side.
Yeah, rather than new, it's iterations of current, really.
Yeah.
There's a lot on the card side. We don't have virtual cards. We'll add virtual cards. We don't have tokenization, which is Apple Pay and stuff like that. We'll have that. We'll be self-issuing. The international payment side, there's a lot of stuff coming through on that. So not just the ability to pay, but also to do more budgeting related stuff. That whole soup to nuts ability to run your finances, of international payments, or even, the whole shooting match through us. And if you go back the 3 years or so when we bought the banking platform, you now start to see why this was important, because to stand yourself apart from a normal FX business where you, as I said earlier, you wire money into a pooled account and they have to pull it out and show it to you later somewhere. This is into your own account on the banking platform, all integrated, simple to use, simple to onboard. You don't need to change your bank.
Yeah.
Just your FX through there and have the money sent direct rather than into the bank and then wired to us. That's where it all starts to stitch together. We have a banking revenue stream and we have an international payments revenue stream, but they're really two sides of the same coin.
Yeah, and again, I'd highlight to investors, I mean, if you're in a business, say, let's say 250 employees, you can't afford to have an expert in foreign exchange, and therefore having guys like you at the end of a phone to do forward deals or place particular trades in foreign currency is a real sort of USP.
Yeah, and at the same time, you can, let's say you got £25,000 to do, you don't want to bother speaking to the dealer, press a button, do it yourself.
Yeah, self-service
platform. So that is a real USP.
Yeah.
Also, the faster payments link, because at the moment there's a 250k cutoff, and we've been part of a trial with the Bank of England to up that to 20 million. Now, just think of companies that have many AP suppliers or staff payments that they need to do that might well go over 250,000 a pop.
We're beginning at the end for backs. Beginning at the end for backs, I think it is an impediment. There's a lot of volume still goes through the back system, which is next day, right? Fast payments is same day.
I wouldn't shout that too loudly though, Ian, because they might buy you. Anyway, moving on, Richard. If you've squirreled away £9 million of cash this year, and you're going to be sort of like your cash flow break even, and you've got higher revenues, and you've got a fairly flat, even though you're going to put in some sales and the fee earning stuff, you're going to be cash positive this year. What are you going to spend this sort of like 9 million? You made a good acquisition or an excellent acquisition of effective FX, just lift and shift and stuff. What are you sort of like looking to spend the 9 million on?
Well, I think the key is to keep a very robust and safe cash position, because, we expect there to be regulatory changes, further demands for regulatory capital. We want to put some aside for a rainy day. We also want to be able to seize marketing opportunities that hitherto we've not been able to do so, to drive further business and further growth.
And what would that be? What an example of a marketing? Would that be basically a trade exhibition or something like that, or joint marketing with one of your accounts?
I think it's wider than that. It's finding a sweet spot for SMEs where we can get our name more widely recognized. And I'm not head of marketing, so I'm not going to volunteer any points on that, but our marketing team are looking at all of that the whole time and finding out whether we could do this event, or what is going to capture the imagination of the SMEs to move to us from other people. And
I know you're a rower. You're going to say the boat race, aren't you? You're going to sponsor it.
He'd love to do the boat race, but that's
I would love to do it. I'd probably do the women's boat race, actually, not the men's.
Yeah, well, unfortunately, it's just happened, hasn't it? So,
and the reason for that is actually in our spend platform, the marketing analysis that we have done. Yes, that the female of the species is the one making a lot of the spend decisions. So it is horses for courses.
Yeah, okay.
Tapping into the other CFOs, the CEOs, the MDs, the head of procurements, that we can help everybody with that.
Yeah. Okay, just big picture then, Ian. Let's push the clock forward about 3 or 5 years, and nobody's going to hold you to this and stuff. How would you?
Well, then why ask the question, Paul?
I'm going to ask the question because I just want to sort of like give me a view, a flavour of how you see the business to sort of like developing. What sort of like just for top level sort of like perspectives, is sort of is it moving more towards on the B2B side, presumably, and top line growth. I mean, I'm going to be upgrading, just let investors, I'm going to be upgrading my numbers given the strength of the first quarter, no doubt about it. I had 32 million for full year. I'm going to be upgrading that to over 33, certainly. I have to run the numbers first, but I'll...
What did you have in for 2025 then, seeing as you want me to look out that far?
Okay, for 2025, I had 51 actually, with a effectively organic growth rate of roughly around about 11% per annum from where we currently are. So... It would be a low double digit sort of organic growth with sort of flat gross margins, and then you got your operating profit increasing because you've got a fixed cost base.
Seeing as I'm not being held to it,
You're not. I am.
I would say that I would be disappointed if we didn't exceed those numbers.
Okay, good. Well, and when it comes to sort of valuation, let's just hypothetically say in 2025 we're on sort of 50 million. Yeah. Now your peers, it's quite interesting and coincidental that 2 days ago I did a whole big analysis on software and fintech companies, and I congratulate EQLS because you are an outlier. But unfortunately, it's the wrong way.
The wrong way, yeah.
The wrong way. Because your peers, PayPal are on 11 times sales, Square are on 7, Global Payments 8, WorldPay 8, Boku 10, Bango 2. Admittedly, they're sort of like consumer. But your closest competitor, I think, or true competitor, is Alpha FX, and they're on nearly 9 times sales. So let's just hypothetically say you're only on 5 times sales, which would be still half of 50% discount. That would be 250 million market.
It's about £1.30, isn't it?
Yeah, well, exactly. Yeah. So there's.
And by the way, it's interesting you mentioned Alpha. I think they grew at 31%. If you look at our comparative business to theirs, which is international payments, we grew at 46.
Yeah.
So we're outstripping them in terms of growth, and so it makes no sense in terms of the relative multiples. I agree with you. So sooner or later, I expect the market to catch up.
Yeah, and I know you talked about your sort of thanking your employees, and I think investors will probably thank you guys. The skippers of the ship have done a tremendous job over the last year.
And equally, we have some very loyal investors. So I know this sounds a bit like a Oscars thank you ceremony speech, thanking everybody, but I know it's been a tough couple of years for them, but hopefully they can see the direction we're going now.
Yeah, well, as I say, big picture wise, if UK GDP went down by 10% and you effectively the revenue only went down by 6%, and the cash position is now your cash break even, and you've got greater operating leverage, and you've got Richard, who's effectively running the finances like with a very sharp sort of like view, etc., of how the business, and yourself sort of like doing the marketing and doing the growth. Then hopefully that will translate into better profits. Now, just closing then, Ian, can you just talk us through sort of framing the next sort of like year 12 months? You talked about the Capital Markets Day in a month's time, but equally sort of like any other news flow, maybe contracts, I don't know, or M&A. Are we thinking of that kind of that kind of mix going forward?
Well, we're always thinking of that, I think, fair to say. You made a good point earlier. With the cash position we're in now, during 2020, if we were going to buy a business, we wouldn't have paid any money up front. Maybe we can do a bit of that now, but I quite like the structure we did with the one we did last year, where effectively cash flow wise it pays for itself. But we're open for M&A, and I had a few that I looked at last year. We'll look again, and the regulatory and compliance framework that we have and is changing all the time, and the FCA are all over the payment space in general, will mean that smaller players just can't cope with it. You can call it a regulatory burden or overhead. We don't see it that way. We're all across it. We see it as an opportunity for us to do potentially M&A as this year goes on. So yes, we're always open for that type of stuff, but it's carry on as we are. As I say, build more stuff, cooler stuff. We've got the foundations. Let's build the cool stuff on top of it, augmented with a far better sales and marketing strategy and plan, itself underpinned by the new CRM system that we've put in, which is connected to everything. So if a customer emails us, calls us, speaks to the dealer on the phone, etc., it all goes into this one place. So that's a huge asset that we didn't have before. So
yeah. Okay, well, thanks very much, gents, and you've whet my appetite for hearing what's going to happen on the Capital Markets Day.
Yeah, well, I'd encourage everyone to attend if they can.
Yeah,
we want to make it the ability to meet not just Richard and I, but the wider team here, and see some real stuff, and get an idea of the future. It's not going to be a dry podium, speaker after speaker with some PowerPoint slides. It can be more interesting than that.
Yeah. Good. Well, and again, for sort of investors, there's a big valuation gap here for a catch-up opportunity in equals. And if you want to follow the stock, then please just press the relevant button on the Vox website. Give you all the news and all the commentary instantly to your inbox. So thanks very much, Richard, and thanks again, Ian. It's been a pleasure, and big congrats on the results and the outlook.
Thank you, Paul.
Thank you.